Welcome to Tesla Daily News Podcast. It's Thursday, February 5th, 2026. Today we're talking about three big investor themes: demand signals in the U.S., software monetization via FSD, and a batch of China-driven regulatory and product changes that could hit costs and design decisions. Let's start with the clearest near-term demand data point. Story 1. U.S. Tesla registrations reportedly fell again in January. Hook. Fresh registration data suggests Tesla's U.S. momentum stayed weak to start the year. Context. For Tesla stock, U.S. demand trends matter because they influence delivery volume, factory utilization, and ultimately automotive gross margin, especially when pricing and incentives are doing the heavy lifting. Details. Motor intelligence data cited in a Yahoo report shows Tesla's January 2026 U.S. registrations at about 40,100 vehicles. That's down about 17% year over year and down about 17% versus the prior month, and it marks a fourth consecutive month of year-over-year declines. Impact. If that pattern persists into the quarter, analysts may trim near-term delivery and revenue assumptions or increase expectations for additional incentives. The margin question becomes, can Tesla protect profitability while defending share, or does it lean further into price to keep volume? Takeaway. Watch how Tesla responds in the U.S. with pricing, financing promos, and mix, because registrations like these often show up in deliveries a few weeks later. Story 2. Tesla's shift on Autopilot features and the push toward FSD subscriptions. Hook. Tesla is reportedly tightening what's included by default, nudging more buyers toward the $99 per month full self-driving subscription. Context. Tesla's valuation still carries a software and autonomy premium. Investors care less about a single feature toggle and more about whether Tesla can turn its installed base into recurring, high-margin software revenue. Details. A Turkish outlet reports that on new Model 3 and Model Y vehicles, a previously included autopilot capability, specifically autosteer, is being disabled unless drivers subscribe to FSD at about $99 monthly. Impact. If broadly implemented, this could lift software attach rates and improve revenue quality, recurring, higher margin dollars, but it also risks customer backlash, weaker conversion at the point of sale, and more regulatory scrutiny if drivers feel misled about what is standard. Takeaway. For investors, the key metric isn't the headline. It's FSD take rate, churn, and whether Tesla can grow software revenue without hurting demand for the cars themselves. Story 3. China moves to ban hidden or retractable door handles starting in 2027. Hook. A design trend Tesla popularized is now on the way out in the world's biggest EV market. Context. China is critical for Tesla's volume and for global EV design direction. A regulation that forces hardware redesigns can introduce cost, complexity, and even small disruptions to production lines. Details. Multiple outlets, including the Associated Press and NPR, report that China will require mechanical door opening functionality from both inside and outside the car, with the rule taking effect January 1st, 2027. The issue is safety. Electrically actuated or concealed handles can fail after crashes or during power loss, potentially trapping occupants and slowing rescue. Impact. For Tesla, this is likely manageable engineering-wise, but it can add part cost and validation work, and it may force design changes on models sold in China and potentially influence other regulators worldwide. If other regions copy the standard, it becomes a broader platform-level redesign rather than a China-only variant. Takeaway. This is a reminder that EV design minimalism has limits when it runs into safety regulation. Investors should watch whether China's rules start a global domino effect. Story 4. A longer Model Y appears in China. Model YL. Hook. Tesla is preparing a bigger, family-focused Model Y variant, and China seems to be the first place we're seeing it. Context. In China, competition is intense and product cadence matters. A stretched Model Y targets a key local preference, more rear seat space and more practicality without stepping up to a more expensive segment. Details. French tech outlet Frandroid reports seeing a Model YL in China, described as about 20 centimeters longer, with a more spacious interior layout. Impact. If Tesla can add a higher-priced, higher utility trim without blowing up manufacturing complexity, it can help stabilize average selling price and improve mix, which matters if the base Model Y is under pricing pressure. The flip side is that more variants can complicate production planning and inventory. Takeaway. The investor question is whether this is a China-specific demand defense or the beginning of a global Model Y lineup expansion to protect share and pricing. Story 5. Tesla and the $20 billion investment narrative around AI and robotics. Hook. Reports out of Europe's auto press say Tesla is planning roughly $20 billion in 2026 spending focused on AI, robotics, and new production lines. Context: Tesla bulls often argue the company is evolving from an automaker into an AI and robotics platform. Bears argue heavy spending risks compressing free cash flow and raises execution risk. Details: a French auto outlet, Le Blog Auto, points to a plan of more than $20 billion for 2026 tied to AI and robotics initiatives, alongside production expansion. Impact: if the market believes this capex converts into defensible autonomy progress, manufacturing efficiency, or a real Optimus ramp, it can support a premium multiple. If it looks like cost without near-term payoff, it can pressure free cash flow expectations and invite tougher questions about capital discipline. Takeaway: watch Tesla's capex guidance, depreciation impact, and any concrete milestones, not just ambition, because the stock ultimately prices results. Story 6. The battery angle. Renewed focus on 4680 cells and dry-electrode progress. Hook. Tesla's 4680 battery story may be back in the spotlight, with reports pointing to progress on dry-electrode manufacturing and scaling. Context: batteries are margin and supply chain. If Tesla can produce advanced cells at scale with lower cost per kilowatt-hour, it improves vehicle profitability and supports future products. Details: Digitimes highlights Tesla's dry-electrode breakthrough as a way to revive 4680 ambitions. Separate reporting from a Portuguese outlet cites Elon Musk claiming success in mass production scaling of 4680 cells. Impact: if confirmed in delivered vehicles at meaningful volume, this can be a cost-down lever and a strategic advantage. But investors should stay cautious. Battery manufacturing is notoriously hard, and Tesla has made aggressive timelines before. Takeaway: the tell will be where 4680 cells show up, at what volume, and whether Tesla reports measurable cost or energy density improvements. Before we close, a quick note on the broader Musk corporate empire, because it can influence Tesla sentiment even when it isn't Tesla-specific. SpaceX's acquisition of xAI is being discussed across CNBC and other outlets, with the combined entity valued around $1.25 trillion. The market read-through for Tesla is mostly sentiment and attention. Does it reinforce the long-term physical AI narrative or raise concern about distraction and capital allocation across Musk-led companies? All right, let's wrap. Today's big Tesla themes were U.S. demand softness signals, Tesla pushing harder on software monetization through FSD subscriptions, and China's regulatory and product shifts from door handle safety rules to a larger Model Y variant, plus ongoing AI, robotics, and battery scale narratives. For tomorrow, watch for any updates around autonomy and safety scrutiny, especially as Tesla is expected to face more public and regulatory questioning alongside other self-driving players. And keep an eye on pricing moves that could respond to that U.S. registration trend. If you found this helpful, subscribe to Tesla Daily News Podcast and follow us for a fast, data-driven update every market day.